Hello, all. This is Dr. Dave Maslach talking to you about reciprocity.com. The E is written with a 3, and in this particular video, I really wanted to discuss anchoring and adjustment heuristics and provide you an example of one that I recently had with my own income tax return. So this is part of my Strategy Saturday series, where I talk about things that matter to people that are doing strategy in business. And, this one is really all about decision making and managerial decision making. So what I'm going to do is get into what do I mean by decision making, get into what is a heuristic, and then finally give you the example that I think is actually really funny and humorous. So what is managerial decision making? This is the process where managers actually make decisions in their everyday life. So normally what we thought in the past, that most people actually make decisions based on a very rational process, that they are going to come up with some information on and sort of gather as much information as they can, get full information about the things around them, and then come up with alternatives based on that information, and then rank order those alternatives and pick the best one. Turns out that that's not really how we actually make decisions in a systematic process in any sort of way. We've been sort of researching this for, probably about 30 years now. And the people that have really pushed us forward and really helped out our understanding, Daniel Kahneman and Amos Tversky, they were some of the first ones in doing that. But then there's like a ton of people doing this now. This is a really big sort of topical area. This is a whole behavioral economics, behavioral finance, behavioral strategy kind of area, right? That there's lots of people doing this kind of stuff. So, I'm not the only one sort of talking about this, but, this example I'll give in a bit. I tried to look up if anybody's done research on this, and I haven't seen anything just yet, but I'm still new. I'm still young, fairly new professor. So actually, by the way, I'm a professor of strategy and innovation and entrepreneurship. Anyways, so what is a heuristic then? So how do we normally make decisions? How we normally make decisions is because the world is really complicated. There's lots of information around us, and we can't necessarily account for all this complete information that's constantly changing and all that kind of stuff. So what we end up doing is making very simple heuristics. So these are just decision-making shortcuts or some mental shortcuts where we just use, based on our experience. We have lots of experience in our life. Based on this experience that we've accumulated over time, we come up with very simple shortcuts that we use to make decisions in a hurry, right? And we can do them much more quicker than we would if we sort of computed all of this information available. So with that in mind, one of the ones that we do use is called the anchoring adjustment heuristic. I think it's really prominent in how we actually make decisions. And it's pretty simple, actually. It sort of states that we have some sort of focal or reference point that we look at, and we come up with this reference point, and then we adjust either up or down based on this reference point. So it goes either up or down in terms of, how we're seeing the world, right? Or what the outcome we're going to expect from the thing that we're looking at when we're making a decision. So the example I wanted to point out, and this is because income tax returns are due, I think they're due on the 15th, right? They're coming up, and we just did them. And we got them. The reason why I don't know the exact date is because we did them. We've got it back already. But the entire process is really kind of funny because if you think about what an income tax return is, it's money that it's not really yours to begin with. And you just pay in, and whatever money is left over that you should have paid to the government or that you overpaid to the government, they just give you back, or you just pay in. So there's a certain amount of money that you have to pay to the government, and every year you just kind of adjust for it, or the government adjusts for it with these income tax returns that you have to send in, right? Or the income tax forms you have to send in. The funny thing is I have this sort of mental picture in my mind of how much I'm going to get back or how much that we have owing to us. And then if it is off, so when we take it and send it to an accountant, and then when it comes back and it's off, right? I feel either really good or really bad. And I'm a really rational person. I think about this kind of stuff and all that kind of stuff. And I know that this happens, but I still feel terrible if we have to pay more than I thought we were going to have to pay. And if we get more back, I feel like this is amazing, right? Like this is amazing. The crazy thing is my reference point should be at zero, so it doesn't really matter how much I pay in, right? It should be all accounted for anyways, and should be trying to focus on that. But then if we have to pay in more, then I feel really, really grumpy. Right. So one thing that I could do, and I had a conversation with a neighbor a few years ago about talking about this, to sort of trick myself in terms of feeling good and making sure that I never get into, because every time you feel bad about stuff, right, you're grumpy at other people, all that kind of stuff. So one way to sort of trick this is to actually pay more into the government than you actually should all throughout the year. So then when it comes back, you're going to feel really elated because you paid in all this much money, and you're going to feel like you got a windfall. And I think that's why people go and buy a bunch of stuff, right, when they get their income tax returns. It's because they think it's a windfall, but it's their money anyways to begin with, right? So it's just all perception is really what it's coming down to. And that's sort of the anchoring and adjustment, sort of heuristic, sort of makes you think and sort of changes the perspective that you have on when you're making decisions and things like that. So it's funny in the sense, why I think it's funny is because it's money that's, the income tax example is money that is already there and it's not yours to begin with, but depending on how high or how low that income tax is that's coming back to you, you feel either really positive or really negative. And it's sort of reflective of the anchoring adjustment heuristic. Anyways, that's all I wanted to talk about today. I just thought it was really funny and I thought you might get a kick out of it. So, and I'm sure I'm not the only one that feels like this when they get their income taxes. But anyways, give me a thumbs up if you like this video and as well as subscribe to the YouTube channel. All right, take care. Bye.